What's going on, traders? All right, back with IC ForEx clearly, aka Todd, aka the Pip Collector. All right, this is video 4 of my beginner Forex video series. Um, wow, man, we've made it through the kindergarten session, and now we're graduating. On the app, we're going to section 2, which is called undergrad. So congratulations. We've covered the very basic information. Everything from what is a pip, how to calculate a pip, what currency pairs are, margin. We looked at the MT4 a little bit. We discuss several things. All right. Uh, Let me say to you, or repeat to you, that if we touch on a subject and you need more information on that subject, go to YouTube. There will be 30 or 40 videos. I don't want to recreate the wheel here, especially when we're talking about this very basic information. I was where you are right now before, and I used YouTube, and trust me, if you don't like the way one person is explaining it, you'll find 6 other people who will explain it differently. And one of those ways you will be able to comprehend and digest. All right. So what we're going to do is we're going to look at the subjects here on this syllabus on the JCP app. Again, you can get this information from Baby Pips. None of this information is significant, other than the fact that we all need to know these basics. Okay. But we're supposed to talk about 3 things on this first syllabus: fundamental and technical analysis. And you'll hear people say we have three types of analysis, but for the most part, if you understand fundamental and technical, you'll be just fine. All right. And it says the 4 types of Forex charts and how to read them. No, we're not going to go over the 4 types. Bar chart, line chart, Japanese candlestick, which is what we look at, and Hakanashi candles. I do know a few people that trade Hakanashi. I'm not going to teach you anything about that. I don't trade Hakanashi, and it has nothing to do with the way I trade or my strategy. The line chart, every now and then, it's beneficial, but for the most part, we'll be sticking with Japanese candlestick patterns. Then we'll talk about trends and price movements. Okay, price movements are near and dear to my heart. Okay, just for your guys' edification, when I first started learning to trade, I watched most of Oliver Velez content. His moving averages, and I learned a great deal. About trading retracements and all that good stuff. So, I still like to trade like that. But, as I got a little bit more mature, as a trader, and, I'm still a young trader, but as I matured a bit, I wanted something that was more definite, right? Like more defined. And I didn't necessarily trade like Oliver Velez. He trades the 2-minute chart. I was more of a swing trader, but I gravitated towards smart money concepts, and I've listened to content and watched content from several smart money people, whether it's Pips of Persia, great market structure series, great video content, very knowledgeable. Mint FX, I had some great content, great ideas, but he was a bit lengthy, but these are great sources that you can go and get your information from. But my number one source, and the person that I listen to still today, is ICT. There's nobody like ICT out there. The the way he breaks it down, it may or may not set with you, but go rewatch it. And if you don't understand, that's fine. As you continue in your trading journey, go back and rewatch it. I guarantee you will get gems. All of his techniques, his time-based strategies, his optimal trading entry, his breaker blocks, his power of three. I mean, his daily stop runs. You name it. It pays you. And if you're willing to come with an open mind and listen to his content, and it's free now, then he'll take you a long way as a trader. If you're listening to my content, a lot of what I'm going to show you, I got it from ICT. I do have an indicator on my chart. I still like the moving averages, and mainly I like them because I work with a lot of people who aren't smart money concept traders, and smart money concept is my cup of tea. ICT is my cup of tea. But the facts are there were several millionaire traders before smart money concepts ever came into the picture. So when we want to argue about what style works, I tell people that they all work, right? They all work. My dad doesn't know anything except for MACD, and my dad ran up $45,000 on a funded account, trading the NASDAQ or NAS. So what I'm trying to tell you is it all works. It all works. The thing that decides whether or not you're going to be successful is the level of consistency that you bring to the market, right? And if you're a consistent trader, you will win, right? And all of us will lose. We're going to lose some trades, but it is our rules, right? And our consistently adhering to those rules that enable us to come back and win several on top of the loss that we've taken, all right? So we all know why we're here. We want to work from home, work from the hotel. We want our time freedom. That's awesome. But let me tell you about the cons. You're going to lose. You're going to lose. Then after you lose, you'll lose some more, right? Just like Oliver Velez says, man, anything you do as a newbie, whether it's golf, football, baseball, basketball, talking, walking, using the bathroom, cleaning your behind after you use the bathroom, you're bad, man. You're bad. It's all bad until you get some experience, right? Some age, some time into that craft, right? And practice makes perfect, man. If you think about your job now, hopefully you're a better employee now, than you were in day one, because you had to learn. You have to learn. Once you learn, you can start taking those steps, and you start doing things, and you take initiative and all this good stuff. Trading is the same way. All right, take baby steps. Give yourself time. Give yourself grace. Let's not be out here with unrealistic expectations. Okay, the market owes you nothing. We are here to be liquidity, and I'm here to help you avoid becoming that liquidity. Okay, so I don't want to spend the entire time talking about the pros and cons, but just know that I know, and now you know. Okay, let's talk about technical and fundamental analysis. All right. As a trader, you want to be an analyst, right? You want to be able to break down what you're seeing on a chart. Okay, that is called technical analysis, right? When you can go to the chart, you can look at the chart, and you can see what is this chart telling me, right? You can discern, you can glean information from the price action that is available on said chart. Okay, so let's look at a GJ chart. Okay, all right, so it is the end of the week, right? Welcome back, folks. Welcome back, traders. This is video number 2 of my beginner ForEx series. My video playing in the background. So, okay, so I like to, if we're at the end of the week, I want to go and look at the weekly chart, right? We're at the end of the month. I like to look at the market from a monthly chart, okay? And obviously, I've already, looked at this at this chart and made some markings on, but I'm going to go ahead and remove this. So what I like to see from a big picture perspective here is, what is this chart telling me, right? So back in 2015, the market takes a nosedive, right? It bounces, right? You get a double bottom down here, right? Relative equal lows. And then the market starts to climb, okay? So me as a trader, I understand that the market is climbing, okay? Now, how far it climbs, we can make an educated guess. We have tools to measure what we call a retracement, which is what's going on now. But the market also drops clues. And, from this, what I see on the market, next week, the British pound will pull back against the Japanese yen, and then it'll go higher. All right. I'm expecting price to push up a little higher before eventually selling off. All right. And you're just taking what you're seeing from the chart, right? And you're interpreting the information based on what you see from these charts. Okay. And eventually you will, I'll show you things that you should pay attention to. Just like these last 2 candles, you have a red candle and then a green candle that engulfs the red candle. You can put the red candle inside of this green candle. That is what we call a order block, a bullish order block, because the green candle is bigger. So I expect the market to push higher in the next coming week, maybe the next couple weeks, right? But that gives me an idea that I need to look for longs, right, next week. So that's just one example of how you do technical analysis. Some people will get on here and look for support and resistance. I don't trade with support and resistance, okay? It just doesn't work for me. If you were trading with support and resistance, most people would probably call this a zone, right? Where you see the market use this as resistance, it breaks through. When it retests, it fell back through, so it didn't hold, and now it held its resistance. The market falls, right? It would be another level of support down here, and then it would push up. It rejected, then it broke through the resistance, and now this resistance turned into support. All right. I don't trade like that, but in a nutshell, that's how it would be done if you traded support and resistance. Okay, so these are what we call technical analysis. What I like to do, I like to look for things like an impulse move. I want to see an impulse move break a previous high. Once we break the previous high, I want to see a pullback, a retracement. Okay. So since this impulse move did not break this high, right? It stopped. We have relative equal highs here. The market pulled back. So the next impulse move will break this high. And once it gets finished doing what it's doing, I expect for it to pull back, right? And I want to see a pullback of at least 50%. I'll show you how we measure that with a Fibonacci. If you go over here and you click here, Fib retracement, you would measure from where the impulse move started to the pullback. Okay, so let's look at this right here. We have an impulse move that started here, we broke these highs. Market stopped and pulled back. When it pulled back 78%, a little bit over 78%. This is ICT's optimal trade entry, which means I would have got an entry and then I could have taken the market up to these relative equal highs. It just so happened lines up with the negative 27 on your Fibonacci. So that would have been a great trade. And that trade would have, let me see if I'll set my long tool up and see what we could have possibly earned with this trade idea. 7.3%, which is a great risk to reward. And I would have caught this trade because it lines up with the way I trade, right? We break a high, we pull back. The pullback is where you want to get an entry to take the market higher. Notice that when the market pulled back, it's a higher low, right? Here's a low, here's a higher low, here's a higher low, and you want to keep seeing higher lows, right? And eventually, the market is going to pull back and break the low, and it'll let you know that it's selling, right? So this is the way that I analyze the market, and I start with, if it's at the end of the week, I'll look at the weekly. From the weekly, I want to drop down to the daily, right? And I want to show you guys some things on as far as the technical analysis goes. It's very important to me, okay? And it will be very important to you too. So if we look at these three candles, let's look at the last four candles, right? We want to start with not the very last candle, but the candle before that. I want you to notice how this wick came down to here, right? Then you have this green candle, then you have this red candle, okay? So the way to read these charts is this way. The market is moving up, all right? The market comes up here, it pulls back. Notice that the wick of this red candle, I'm going to mark it with a line. The wick of this red candle stops right here. Then you get the green candle that breaks structure. When this new candle opens up, as a trader, I want to see the wick, or I want to see the candle push all the way down to this red line, all right? Because that's healthy price action. Then I want to see the market push up. In this case, it did not fill the red line. So we have what I like to call an imbalance, right? Fair value gap. If you need more information on this, go to YouTube, type in Smart Money Concepts imbalance, Smart Money Concept fair value gap, okay? These are important when it comes to trading or seeing your pullback and understanding where you want to see your pullback go to. There's another gap from this candle to this candle. So I would mark that as well. These are important for me. So when the market does pull back, I expect that we will close, price will push into these gaps, right? All this means is, you see this big green candle? The price was not offered to sellers, right? In this candle. So the red candle needs to come down, right? And basically offer price to sellers. All right, that's the best way I can describe it. Again, there are videos, hundreds of videos on YouTube that explain this probably a little bit better than what I'm explaining to you. Okay, this is the same thing. The market pushes up hard. It's only buyers, or it's only the buy algorithm is kicked in as prices pushes up without pulling back, right? It's not offered to both sides, buying and selling. So now when the market retraces, is going to push back into these areas before going higher. Okay. So when I look at this on the weekly, right? I'm a firm believer that when I see these candles, right, I want to see, as this candle wicks out, I want to see it pull back at least 50%. So if it pulls back 50%, it will definitely close this imbalance. If it pulls back 78%, it still is not going to be able to touch this imbalance way back down here. All right. But it doesn't matter, because it can leave this imbalance, and then on the way down, price can come back and mitigate this imbalance. I do expect this pair to sell, at some point, right? I think it needs to go up another couple hundred pips, maybe 300-400 pips. And then I expect price to collapse about 8, 9, maybe 1,000 pips. Okay. So this is part of how I do technical analysis. And we will get into this, when I show you how I trade a little bit later on in some later videos. But, there are several tools that you can use. This is moving average. I have two moving averages on the chart, a 9 period and a 13 period. And I have them color coded. The shorter period is always going to be green. The longer period moving average is always going to be red. Okay. What else? So as you do your technical analysis, you're always looking for clues on the charts that are going to tell you what direction price is going to go. Okay. So again, on the weekly, we know we're going to go long, but you see how this red candle is bigger than the green one? It's telling you that the market is going to pull back. So what we really want it to do on the weekly is to mark up our golden zone, right? I like to mark this area up because I'm not going to trade this until price at least pulls back to the zone, and if it just goes straight up, then, that's cool. It's just not a trade for me. So I'm only going to be interested in this trade if it hits this red line. Okay. Now, if on a higher time frame, well, that's still about 112 pips. So 112 pips is stupid, man. I can make a living off of 100 pips. And if you look through my videos, I showed you how you can make 10% off of 100 pips. I don't want to get anybody caught up in a percentage and all that good stuff. Trust me, it's way down the line for you guys, all right? It still requires some skill. It requires some know-how. It requires time frame correlation, none of which we've talked about at this point. If we're thinking about percentage now, then you're doing the wrong thing, and you need to close the YouTube video out and go find something else to do. As a matter of fact, you'll have a better time, and it'll be cheaper if you just go to the casino. Okay, don't worry about percentages or any of that at this juncture. I'm just trying to get you to understand, how I look at the charts. Okay, we're looking for patterns. We're looking for highs and lows. We're looking for swing highs and swing lows. We're looking to see either price respects those or price, breaks through. Okay. Once we can determine the direction, then we can think of a trade idea, at which point we drop down a couple of time frames and we set up our trade on the lower time frames. Okay. Again, we'll get into all that. This is just an overview of what technical analysis is. Okay. All right. Let's talk about fundamental analysis. Fundamental analysis is basically where you analyze the fundamentals. And what are the fundamentals? Okay. The fundamentals are things that happen in the real world that drive the market. Okay. Forex market is a market that is driven. All right. If you're trading currencies, the primary driver of the value of a currency is the interest rate. Okay. Why is that? It's simple. It's the same reason that you want to put your money in a bank, or you choose not to put your money in a bank and you put it in a high interest bearing account. You want the most interest, right? If you give the bank your money, you want them to pay you the most interest on top of that money. And, rich people and people with money, entities with money want to get the biggest bang for their buck. If the U.S. economy, if the U.S. interest rate is 5%, excuse me, and the euro interest rate is 3%, Berkshire Hathaway is going to put cash in the U.S. dollar, in the U.S. bank, because they're going to get 5% for that cash instead of 3% over there in Europe, right? The Japanese yen I said it doesn't really, it just doesn't pay interest, right? It's a negative interest rate on that. I got this website from ICT. I would suggest that you guys mosey on over there and watch his WENT series, What Every New Trader Needs. I would also suggest that you guys watch his Market Maker series. All right, they're both a series of 5 videos. Chances are you will not understand very much, but I would submit to you that you need to watch that now, right? And as I take you through these trading videos and whatnot, once you finish up my series or the way I trade, then when you go back and watch ICT videos, you will glean more from those videos, okay? I still go back and I still pour through the information. He also has a mentorship 2022, 2023. Outstanding stuff, okay? So basically, global-rates.com. This gives you a list of all the interest rates, okay? And the dates that they raise the interest rates. So if you notice, the highest rate on here is Brazil, all right? Their currency is not more valuable, but it has a high interest rate. I don't trade this Brazilian currency. I stick with the majors and the some of the minors, right? The JPYs. If you look at Japanese yen, it's negative 0.1, right? You're not getting anything for your money. But the reason why people like the Japanese yen is this considered a safe currency, right? So if you have uncertainty in the world, anytime there's a war, anytime there's a collapse, anytime there's, when I say collapse, major companies, banks, when they collapse, the Japanese yen gets very strong. So you want to sell any pair against the Japanese yen. So you have GBP JPY, USD JPY, CAD EUR JPY, you click sell. The value is going to drop on those currencies because the yen is going to get strong. Okay. There's also a website, and I forget the name of it, but you can you want to see the COT, commitment of traders, right? If you type in COT, I know for sure barchart.com is what was the website I was thinking of. But if you type in COT, I know on Instagram there's a page that gives up the COT reports, right? And the COT reports will tell you what the commitment of traders is, okay? But when you get to this website, you want to I'm going to look for COT, commitment of traders. I think he actually goes to futures, commitment of traders. Okay, you can pick any of these currencies, and you can see how people. When I say people, it's not people like me and you, but I'm interested in seeing how the institutions are stacking up their money. And you'll know that by going to the open interest of these COT reports. I don't know why this is not working. All right. So, in the later videos, I will actually break in here and actually show you how this works, because I'm not getting futures prices. Here we go. Here we go. So you go up here, you select the commodity. I pick the Japanese yen. All right. You don't want the cash. You want the actual contracts, right? And you want to go to the one with the largest number of open contracts, which is this second one. I want to click on it. Okay, you see this says this is a strong sell the Japanese currency. That's why the other currencies are rising against the Japanese. But if you look at the chart here, right? Everybody is short the Japanese yen. Now all of a sudden you have an uptick, right? So here in the future, I can see on the chart that that the Japanese yen is about to gain strength. So what you would do as a trader is you keep an eye on this, and when you start seeing the uptick, right, and as the uptick starts to push up, you'll understand that the Japanese yen is getting stronger. Okay, so you don't want to be selling the yen when the institutions start buying the yen. Okay, and this is the same with every other currency out there. Okay, so The objective here is to look at the currencies, right? You want to match a weak currency up with a strong currency. And you just look through each currency and see which ones are strong and which ones are weak. And ideally, you match a weak currency up with a strong currency, and you take your trade in that direction, right? And again, these trades are probably going to play out over weeks, right? So that's in a nutshell some of the drivers, right? And some of the tools and some of the reports that you can use, the websites. What is the interest rate? Where are the institutions placing their positions? Real world situations, wars. There should be some go-to plays, right? If the dollar gets stronger, in general, I look for commodities, which are the indices, the US 30, the NASDAQ. I look for them to get weaker, right? If the dollar gets stronger, I look for gold to get weaker. If the dollar gets weaker, I'm buying gold. I'm buying the index, okay? This is generally how it works. High interest rates are good for the US dollar, but they're bad for the companies, all right? So the Dow, the companies that are on the Dow Jones, the companies that are on the NASDAQ, it costs money to run those companies. But if they make the price of money expensive, then those indices should taper off, okay? Let me show you one last thing on the chart. And you will often hear people tell you that you won't make any money as a trader until you have some experience, okay? And I'm going to show you briefly what they mean, okay? If you're just new to trading, then you probably haven't traded in different market environments, okay? You hear people saying that, okay? So back in 2008, we had a housing bubble, right? Subprime lender crisis. When they're loaning money to people who couldn't afford these houses, they had ARM interest rates, right? And when the interest rates were high, when the interest rates went up, your mortgage went up, right? So if you look at the market, it tanked, right? This was the last crash. Actually, it was second to the last crash. COVID was the last crash. But anyway, the market crashed in 2008. So they dropped the interest rates to the floor. Look what happens. US 30. If you look on NASDAQ, it's the same thing. And then when the big C hit us, right? At the end of February and in March of 2020, we all know what that crash was. That was the big C, right? Again, the interest rates are zero. Look how the market climbs. Right. We came out of the big C, and in January of 2022, January of 2022, we started raising our interest rates. And if you don't believe me, go to this world interest rate sites, and you can see when we hiked the interest rate, and look what happened to the market. Yes, the market plummets, right? And I know we're back up, but nothing goes down forever, right? The market went down, it pulled back right almost to our 78.6. I do expect the market to find some more down action. We have a number of things going on. We have the debt ceiling crisis, this made up debt ceiling. But the fact is that Americans spend more money than we make. We've been like that, right? If you understand some basic things about the economy, what creates inflation and all that stuff. Again, YouTube is a great place for that. Supply and demand. If you understand a little bit of those basics, then you can put those fundamental analysis into play in the market, right? And it'll give you trade ideas, right? What I would try to tell you, though, is if you're trading strictly fundamentals, and I don't trade strictly fundamentals, but if you find yourself doing that, I still say you would be better off or better served if you understand the technical analysis. Because even if it's going to sell next week, and you go too heavy on the sell this week, you can get kicked out of the market before the sell actually happens next week. Okay. So even though you think something is going to sell, you can't sell it until it actually starts selling, and the chart will line up on the lower time frames and allow you to take those entries. Okay. So, that was a mouthful for technical and fundamental analysis. It was a little bit longer than I anticipated, but the information needed to be told. Okay. Where are we? Okay. We talked about the four types of ForEx charts. These are candlesticks. Okay. I showed you how the wicks should touch. And that's what I wanted to discuss as far as what we wanted to see from price. We'll get into all this stuff in greater detail when we start analyzing pairs and breaking down charts. Okay. So we covered syllabus 1. I'm going to get out of here, enjoy a little bit of the weekend or the evening. I appreciate you guys sticking in and going over this information. When we come back next time, we will maybe discuss some of these indicators and, maybe the trends and all that good stuff. And we look forward into finally getting into maybe some pair. Okay. We also have to talk about the economic calendar. And we'll get into that information in the next video. All right. So you guys have a great one. I appreciate you hanging out, and we wish you good luck in these trading streets.